Today we are going to talk about small business accounting. Many small business owners have a question, or they have a myth. They generally think bookkeeping is accounting. So my question to you is bookkeeping accounting? Or is it same or is it different? In my view, I can divide into 2 or 3 different ways. Let's call it numbers. What is required in numbers from a small business? You are going to use the numbers to do what? First, you need to do the record keeping. Then from the record keeping, you need to do the reporting. Then from the reporting, whatever the preparation of reports, you have to do the analysis. From the analysis, you are going to come to interpretation of the numbers. So record keeping is bookkeeping in a sense. Then reporting, you can use that partially under the bookkeeping, balance under the accounting. Because you may be preparing corporate reports, you may be preparing reports to do the financial statements. So that can go into accounting. Then the analyzing part comes. Most of the analyzing and interpretation part come under Chief Financial Officer or controllership line. So basically it can, in my view, it can be divided into 3 primary criteria: bookkeeping, accounting, and CFO services. Bookkeeping is record keeping and reporting those numbers, then analyzing, then interpreting. Now, having said that, how it affects the small business? Most small businesses, when they start their business, they will start their bookkeeping or accounting with their own resources. That means the owner himself or one of his relative will start keeping the records. Can you keep records on Excel? 100%. You don't need a big software. You can do it. However, it depends on how much you are recording, what is the complexity of your business, what are the information you need from that records. That will make a decision, or that will force you to decide whether you need a software or you don't need a software. Software is a convenient way of keeping records. Nowadays, with the cloud accounting, the reporting methodologies have completely changed, and record keeping methodology also completely have changed. I will look into that in a little bit later on in this session, but for now, let's talk about how you can select how to keep the records. So to keep the records, you can imagine you are going to select a software. Now, there are many softwares in the market available, but very popular ones, if you think about it, it can be QuickBooks, it can be Sage, it can be Xero, Wave. There are so many other softwares as well. How do you determine what version of which software you need? So even if you take QuickBooks, there are so many versions inside of QuickBooks. Different price models, different things it can do. So first question you need to ask is, okay, what do I need? What are my requirements? Am I having branches? Am I having different departments? Do I have to identify different product codes? How many product codes we have? Do I need a serial controlled inventory system? Certain things cannot be done on cloud. Other things can be done only on the desktop or server models. Sometimes the smaller softwares cannot have serial control numbering system or serial control inventory system. Then you need to spend money for a better system. Now, when you have all this system, once you have selected, it primarily help you to grow the business. But I will tell you, don't spend your time and energy in looking for a software. Give it to the experts, because otherwise you will put a lot of time in this. In fact, if your plan is to grow your business, if you are already doing a good size, in my mind, for most people who contact me, I tell them, if you are doing anything under $30,000-$40,000, do it yourself. Don't even go to somebody because it's too small. But once you hit 100,000, I tell them, okay, you come and see me, I'll try to help you. Anything under 100,000, I feel they are very small and they don't need a proper accountant or qualified accountant. It's not that it's not correct, but the value, what you get from the accountant and the price point you are going to pay are not going to match with your turnover. That's the main point I'm trying to say. It's not that we want to refuse work. It's a value proposition. So if you are more than 100,000, you are thinking to grow now to $1 million. Now what do? Now I think you need to invest some money and you need to leave experts to help you. Yes, that's a cost element, but at the same time, the benefits can outlay the cost. So you select the correct software. When you select, as I said, how complex your operation is, what are the departments, what are the sections, how your reporting should be, and how the inventory system should be, how your delivery system should be. Are you giving quotations and then you are converting the quotations into the ordering system? There are lots of questions to come up with the correct system. How you can gradually grow is very important. Once you have done this, then in the system, when you are going to set up a system, the primary thing comes. You have to set up something called chart of accounts. What is chart of accounts? Chart of accounts is different categories of how you are going to allocate all your numbers. So let's go back to the numbers. Normally you would have heard financial statement. What is a financial statement? The whole accounting within the financial statement, I will say, can be categorized into 5 items. It's only 5 items. But how you categorize and how you interpret it and how you put across is the accounting part. The 5 items are, first, all of you know revenues. That is the money coming in. You are selling, you are getting money, revenue. Then all your expenses come to play. That's the second part. Of course, there can be so many different categories, but at the end of the day is all expenses. So those 2 items goes into profit and loss account. So profit and loss it can be called expense report, it can be called income and expense. There are so many people to call differently, but at the end of the day, profit and loss have income and expenses or revenue and expenses. And the net is the profit or loss. Then the second portion in financial statement is balance sheet. What is there in balance sheet? In simple terms, you have assets. That means whatever the items you own. You own a building, you own a machinery, you have a bank account. Of course, it will be divided into current, long-term. There are so many categories. Don't worry about those. But at the end of the day, it's an asset. Then you have a liability. What is liability? The money you owe people is liability. It can be bank loans, bank line of credits, credit cards, or your supplier credit. Everything is going to go into the liability. So we have covered 4 items. What is the 5th one? 5th one is owner's money. Owner will be putting money into the company and that will be categorized as owner's money. It can be equity, it can be owner's loans, but it's owner's money. That should be very clearly identified. So basically, income, expense, that goes in profit and loss, then assets, liabilities, owner's equity. This goes in balance sheet. So these all 5 together create your financial statement. In addition, of course, in the financial statement, there's something called cash flow statement. So cash flow statement shows how much money come in and how much money goes out. End of the day, that is your financial reporting. Now, to do this financial reporting, while you are doing this, how you identify where the numbers goes. That is the place where you are taking your source income, your primary information, which is coming from the banks, credit cards, or any other paperwork coming to you, and you are categorizing those income and expenses into these 5 categories which are in the chart of account. That is called allocation, or it can be journal entries. There are various techniques they use depending on how we capture this information. And once you allocate all these information, all your primary information into different GL code, general ledger codes, which is called a chart of account, that is called trial balance. A trial balance is the primary document created by a bookkeeper. So bookkeeping will make all your source documents allocated correctly, balanced correctly, reconciled correctly, brings you a trial balance. From the trial balance, the accountants will prepare the profit and loss account and the balance sheet and the cash flow. Now, when you go to the bank will ask you, hey, do you have a financial statement? So you are going to provide them with the financial statement which is created by the accountant. They may say, oh, I need a compilation. Or they may say, no, you are trying to borrow a lot of money. This is not compilation. We need little more than that. We need a review statement. So what happens? In the accounting field, we will call the financial statement in different stages, different of level of accuracy, different level of verification. The very base level is called notice to reader. Now that same notice to reader, the name is changed as compilation report. Most CPAs will provide you with compilation reports. That is generally good enough for most of the small businesses, especially in Canada. If you are borrowing anything under $1 million, generally most banks will accept a compilation report from a qualified CPA. But if you are going to borrow more than $1 million, at that point, most banks will require a review engagement. Review engagement is something more than compilation where accountant have to verify and make sure lot of entries and lot of numbers make sense. And they have to provide their views on the financial statement. In the compilation, they don't provide any views. We will categorically say we have not provided any opinion on the financial statement and it is management's responsibility. But in review engagement, accountant will say what is their opinion. Is it presented reasonably or not? That's what banks will ask if you are going for more than $1 million borrowing. So this is the very basic understanding of what is the financial statement and how you select your software and what is the report you need for a small business. So when we talk about all this software and how you are going to maintain, now remember, depending on the industry you are in, there may be very specialized softwares. That's for very specific reasons. Okay, small business in Canada can be even 10, 15, $20 million turnover. Small business doesn't mean 100,000, 200,000 only. Actually, that is macro businesses. So when you come to specialize, say for example, most people we know restaurants. Now restaurants, is a QuickBooks is the best software for restaurant? That's a question to answer. I'm not going to give an answer in this open forum. However, there are specialized softwares for restaurants. They will take the menus in the POS system, whereby we can analyze various things. In the same way, there are softwares for manufacturing, where we can put bill of material. What that mean? That means we can show how the product is developed or produced, and we have a full costing methodology behind. So there are specialized softwares for specialized need. If you have that kind of a need, you need to approach a qualified accountant like us, any other qualified accountant. They should be able to give you a proper analysis of what software works for your industry, right? So once you know the correct software, if you are growing, implement the software, have a good, proper inventory control, have all the source documents in a proper document management system, because when CRA or the taxman going to audit, they are not only going to look at your numbers, but also they are going to look at how much of that can be proven. That is a very important thing. If you can't prove your expenses, they may reject all the expenses. So you need to have your expenses recorded properly and your employee records properly. So as long as you can have a proper saving of your paperwork and accounting software suitable to your business, you will solve the problem of reporting. So as I started in the beginning of this recording, In the accounting, the primary work is record keeping. Then from there, you will do the reporting, then analyzing, and then interpretation. So if you have chosen the correct software and if you keep the records correctly, then you do the reporting. With that, the government, tax department, CRA will be very happy. And even if they audit, you can provide the record keeping what you already have maintained. Then the analyzing part, if you can contact a proper qualified accountant, they will help you to do the analyzing. From there, interpretation and growth of your business, that also can be helped by a qualified accountant. Thank you. Have a great day.